stage, and it's going to get crazy. There's lots of questions, but go ahead. Welcome up to the stage. We're glad to have you.
Thank you, James. Thanks, everyone. That was the most glorious intro I've ever had in my entire life. That was amazing. I wish I could be introed like that every time. That was incredible.
Thank you, sir.
Thank you, guys. Yeah, it's really exciting. I popped in at the very beginning, and then I heard the space was going on, and yeah, it's a crazy time in crypto. I've been making my ARC memes, but it's true. It's definitely coming. We're definitely going to have an ARC type moment, and the flood is going to affect the centralized exchanges, the unbacked stable coins, the wallets with weak random number generation and entropy. There's going to be a moment in crypto. People are very excited about the future, but there's definitely going to be a rough patch coming up, a big transformation coming up, and yeah, it's very exciting to see how that's going to come about. And when it comes to cryptocurrency, you really have to do your research, and you have to use secure applications, and you don't want to lose your crypto. You don't want to keep your money on a centralized exchange. You want to use a DEX. You want to use the right wallet. And if you make the wrong mistakes, you could lose all of your money. And there's so many stories like that. And I've helped countless people get into their wallets and get back into hardware wallets and recover funds, get funds from exchanges. And so it's really important you have the right software, the right mindsets, and you make the right choices, because it's not like a traditional bank where if you lose your password you can get back in. If you lose your crypto, it's gone for good. And that's why we started to build the Metal ecosystem going on almost 8 years ago now, because we saw that there was a need for this tech, and there was a need to bridge the traditional and DeFi worlds. And I think we've done a pretty good job, but we're only getting started.
The end is just the beginning, and after the end, there's a rainbow.
And one other thing a lot of people have been talking about, somebody just before you joined the spaces came up and asked, they said, well, Metal blockchain was listed on the FedNow website and then taken down. The answer was given to that individual, but people are like bullish momentum, Rick, me, people are getting messaged about it. Like, it's better to hear it from you, I feel like, for the community's sake. And then another question I'll read off after that, but go ahead.
Yeah, so in regards to that, and I saw a tweet today where somebody mentioned it and referred to Metal blockchain as a fork of Avalanche. So I tweeted about that. We are a fork of Avalanche, but we're also building all types of cool technology like A-Chain, the WASM-based subchain, which is kind of a departure from the C-Chain, which has its merits, but it inherits some of the problems of Ethereum. On the FedNow, on that news that came out a while ago, nothing has really changed. One of the things I would say is that I don't really comment on it anymore, because I just like to let everything go through official PR channels, because it's so easy for words to get twisted and for the wrong things to be said. Everything that was out there is all moving forward. So that's already been, put out there. What's to come in the future? Well, you'll have to wait and watch and see. But I'll tell you, I would say like 10 years ago in crypto, people used to ask me, when news, or what's the new thing? And I would really be very quick to just get up and say like, oh, this is what I heard. And these days I'm much more, when people ask me when news, I've been telling people, wait for an official announcement, wait to hear, wait till you see a joint press release, or wait till you see something that comes out, because that's, I think, is the most powerful statement, versus kind of, hey, I'm just going to come into a Telegram room and say something. When you look at what we've accomplished so far, and the partners, or the integrations that we're working on, and things like that, it basically paints a picture that is undeniable, the direction that we're going, right? And I think there's a lot of doubt where people say, oh, well, crypto companies come and go all the time. But Metallicus has been here since 2016. Glenn and I met in 2014, 2 years earlier. And, we've been doing this for, going on 10 years in building applications in the crypto space. I've been going at it for longer than that. And, the direction that we're going, it's inevitable, the intersection of banking and decentralized finance. But first, we're going to have a flood. And for those that were following me with the predictions, literally every single prediction has come true. Every single prediction on my
Spot
list,
on.
for the most part.
Yeah.
Yeah, thanks. And
Like
some
a
of them
wish.
haven't happened yet. There's still a few left, but those are going to be kind of the momentous, like, you're telling me some of these stable coins aren't backed, just like UST, last summer when that collapsed. And also, exchanges that people still think, oh, that's too big to fail. Well, you might be surprised, but what's going to come out of it are going to be banks coming into blockchain, larger financial institutions coming in. And maybe if a large centralized exchange were to have tens of billions of dollars locked up, maybe that's not the end of the world, because that's just less sell pressure into the market and less speculation and playing. And people, yes, there's less circulation, but that's like Mount Gox, right? Mount Gox, for the record, was around 600 million, right? And some of it was recovered. It's 2023, almost 2024, and we still haven't gotten our funds back from the Mt. Gox criminal bankruptcy proceedings, which has been going on for 10 years. That's 600 million. FTX was what, like 10 billion? That probably won't complete until 2032 or 2033 or something like that. So if another one were to happen, it would be the same thing. It's almost like a supply reduction. And then all of a sudden, institutions and enterprise and Fortune 500 starts to enter the space. So that's where I see things going. But we go through these cycles, and we've been in a bear market for a long time, and maybe it's not over yet. Maybe not. Maybe we're just kind of having a relief rally or something. Who knows? But at the end of the day, the advancement of cryptocurrency is not necessarily tied to the price. It's tied to the amount of time
It's
and
kind of
people that are in this space. Yeah.
Crypto Rick answered great question.
Hi, Marshall. Good to see you on here. I just have two questions, one relating to quantum security and the other one to privacy. So the first one is privacy. A lot of people are concerned that, we are able to see what everyone else has in their wallets. Is there a way where there's a private type thing in the future, like a private account? And then my second question was relating to quantum security. As an example, the XRPL apparently is not quantum resistant. We understand XPRNetwork is. Is Ledger and Decent safe from a quantum or a backdoor attack? And if so, does that make WebAuth really Noah's Ark, because it's the only quantum-proofed wallet, and it's, it will survive, basically?
Yeah. So, sorry. In the the second question was the quantum question and quantum resistant question, and then the first question was, I'm sorry. Could you repeat that first one or remind me?
Basically, privacy. So a lot of people are concerned,
privacy,
as an
right.
example, in the future they may be censored or their wallet's frozen just because they post something on X app, or they've got no privacy
Right.
because we can see who's moving such and such.
Right.
How do you combat that, and so on and so forth?
Yeah, so the first question, the privacy question, is one of the items on the Phoenix roadmap, and we're still looking to complete that. It's the compliant privacy spec. But one of the other things in crypto and blockchain has been the ZK proofs. So using using essentially like the ability to like Monero ring signatures or other anonymous cryptos, having the ability to obfuscate the path of funds. But one of the issues with that is that it poses a lot of AML issues for CeFi, TradFi, banks, and so forth. When you make a deposit at a crypto exchange, centralized exchange, and most decentralized exchanges that wrap coins, they're still looking at where those funds are coming from and going to. And if they're hitting like a dark web mixer, or hitting a sanctioned address like Hamas or something like that, then obviously they're going to stop it, they're going to freeze it. So one of the hard parts about the anonymous crypto is that how do you balance that? How do you keep that compliant? Now, I think there might be a way, but the reaction for a lot of exchanges was it got delisted, right? So like a lot of these currencies. So my thought with the future of anonymous crypto is that it goes two ways. The Monero tends to become more of a offline P2P thing and kind of like cash. And I don't think that it goes away. I think that it grows in its own kind of market. And then in the traditional finance world, the compliant privacy is, not completely shielded. So, no one could know where money came from or went to. But for everyone else looking on the outside, like if I wanted to see, Rick, your National Australia Bank or something like that, I can't see what's in your account, your transaction history. I can't see any of that. I can just, at most, I have like a, what do you call it, the pay ID or something like that, right? And I can send you in the U.S. in America, in the U.S. it's Zelle, right? So like we could have some sort of way to send each other, but I can't see into your account. And in blockchain, usually you can see into everyone's account. So like on ENS or on XPR, you could be at Marshall or at rick.eth or something like that, and you could see the person's whole wallet. So I think that the solution in the future is to be able to use some of this technology to give the user privacy and also be compliant with laws like GDPR and other like EU and US and global privacy laws, while also staying compliant. So, for example, if a bank got a deposit on XPR, you wouldn't necessarily know who it came from or went to. You wouldn't be able to tell that on the chain. But for example, if the bank wanted to query, like, hey, where'd you get that money? You could see that it came from a verified business, but they just can't see into your account and transaction history. And no one's done that yet because I think it's kind of the unsexy thing, the cypherpunk thing, which is very cool, but maybe doesn't work with a bank, but it has its own niche, like I explained earlier. Maybe the way to do that is a blend of both, but no one's done that yet. And so that's something that we're really focused on. And it is going to come for XPR. We'll have that compliant privacy. It's a little bit harder. I think it's a lot harder to do on something like the EVM, although, it's possible. But XPR and Antelope is kind of better built for that. On the quantum resistant question, so I get asked this question a lot. What would happen to Bitcoin or cryptocurrencies if a quantum computer came out? And is WebAuth and is XPR quantum resistant? The truth is, and there are so-called blockchains that claim to be quantum resistant. The truth is that I don't really believe that any researchers have shown true quantum resistant blockchains or wallets. The way that it kind of goes in cryptography is as that evolution is made, as someone has access to, higher and higher levels of compute and could potentially do something like this, there are breakthroughs in academia where papers are published and things like that. So in the case of a quantum computer that could create a collision and unencrypt something that would normally take, infinity years to decrypt, what I've said and people have asked me is that, why is it not going to happen to you on WebAuth or onto XPR? Because we, as a team, as a core developer team, stay on top of all of that. We are constantly watching all of the things that are happening in the cryptography world, the security world, and also when it comes to the entropy in our wallets and things like that. Recently, there was a security disclosure on Bitcoin JS. So old Bitcoin JS wallets could be hacked. But the risk actually, when you hear about quantum, it's less likely the risk for anyone here anytime soon in the next 10 or 20 years is going to have to even think or worry about that. The issue is more about actually older code that's reused in wallets like Bitcoin JS that could just have regular collisions. And you don't need a quantum computer to do it. Somebody could do it with not a quantum computer, but a powerful machine could essentially break the wallets. And it's happened multiple times before in crypto. There's a company, blockchain.com, it used to be called blockchain.info. I think it was like 2012 or 2013. A hacker named Joho on Bitcoin Talk hacked like all the Bitcoin out of their wallets. And the craziest thing was they were non-custodial wallets. So people were shocked because they were like, how did they move the Bitcoin out of my wallet? I thought that I was the only one with the key. Because if you called support through them, they would tell you that like they can't recover your wallets. They actually had used a weak random number generator, and the attacker was able to figure that out. It was a happy ending because the hacker was a white hat and went and made a long post about weak number generation for wallets and these types of exploits and gave all the money back, which was nice. But that's more likely than a quantum attack. And even before a quantum attack, who would do a quantum attack? It would be a nation state. It would be North Korea, or it'd be some country that has a lot of money to be able to do that. Well, you're going to hear about it in academia before it kind of reaches that point. And Kim Jong-un is going to make all types of threats before you. So when I say we're resistant, we're resilient, and we stay on top of these things. And I also wanted to kind of dispel some rumors and myths that that's the lesser problem to worry about. As an individual, chances are you're not going to be the target of a nation state or anything like that. But the more worrying thing are like if you put, hopefully not, right? People are laughing. Hopefully not, but you never know. But the bigger risk is actually these older wallets. Like somebody puts some Bitcoin on a wallet from 10 years ago and is like, I'm going to keep that away forever. And you think since no one could ever see the private key that they couldn't get access. But the way that key was generated weakly, right? And in a very weak way. And so it could be swept right out of your wallet. And I'll give one last example. Back in the day, over 10 years ago, in the early first couple of years of Bitcoin, vanity addresses were cool. So people would have a Bitcoin address with a word in it. But in order to get a vanity address, you usually have to pay a service to generate the keys for you. So you're trusting that the service doesn't screw you over. And most people would use the vanity address for tips. But there were all types of, I was a victim of one of them where I think somebody stole 100 or 200 bucks out of a vanity address. I couldn't believe it. But yeah, the real risk for everyone is using weak wallet security. I wouldn't worry so much about quantum attacks. I'd worry about the wallet that hasn't been updated in 5 years and is sitting on a paper wallet in your drawer. I like to give more actionable advice to people of stuff that will hopefully help you not have these problems. Because the quantum stuff is more of like you're going to hear about it in the news before it hits that. But it's very important that the developers and the people behind the software that's securing your crypto are really in tune with that stuff, and we are.
Thanks.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
And we have some new people coming up to the panel now. Welcome up to the stage, Crypto EUL. He also actually runs a YouTube channel which covers things about XPR, Metal Blockchain, Loan, XMT, Metal DAO, the partnerships, the integrations. He's doing an incredible service to the entire community. We thank you. We're very grateful for all the videos that you make, the content that you put out for people to learn from. We're glad to have you, and the floor is yours to say whatever you want.
Thank you, 3TF. Hope everyone is doing well. Hello, Marshall. All love back to you guys as well. I have one question for you pertaining to what you've been saying. So, what do you think will be the downfall for crypto or the digital assets to step into the mass adoption, right? So, even as the stable coins will fall and the new ones will emerge, because I feel something has to happen for the mass adoption to occur. And even as you just mentioned, the fall of FTX and all of these stable coins depegging, what do you think will take for the stable coins to basically, hit the bottom?
Oh, I like this question. So one thing, there's something that's happening right now in crypto not a lot of people know about, and it's a stablecoin war. And the business of stablecoins is a great business because if it's managed and run correctly, which needs proper anti-money laundering, good cybersecurity, and some of the issues are doing it, some are not, clearly, right? But the issue here is this. At the end of the day, the stablecoin war has kind of come down to two stable coins, and we all know what they are, right? There's Circle USDC and there's Tether USDT. And Tether started in 2014 as a company called RealCoin. It's actually connected to Bitfinex, a very early crypto exchange. And they may not be the highest liquidity, but they are the issuers of Tether, and that's really has been their big business. Now, the issue here is that they're just kind of like polar opposites, right? USDC is compliant and is doing the AML and doing all these things, and then backs all of their, and this is very important, backs all of their stable coins with real dollars in a bank, right? And since it's gotten so big, it's actually become kind of hard to manage, right? Because the business of the bank is lending currency out. So if Circle makes a deposit of $10 billion of stable coins and the bank only holds $11 billion of cash, they might start loaning that Circle money out, right? Which means that maybe if you need a redemption suddenly, you can't get it back that easily, which is a really bad issue, because if you can't give your redemptions, then the bank is going to be closed, right? And then they're just going to liquidate it like it's FTX or whatever. Now, we saw this recently with the closure of Silicon Valley Bank and Signature and Silvergate and then First Republic, and it was almost started a rolling collapse of banks. What happened? Well, Tether is not really backed. I mean, I don't want to say, like, I can't really say, here I've got the proof that there's nothing there, but the absence of proof that there is something there is the problem, right? Whereas Circle can show you that they actually have the dollars, Tether can't. And if you're following it, just go on to CoinMarketCap and look at USDC or USDT, sort it by market cap, and choose the overlay capability and put USDC and USDT market caps together. You're going to see something really funny and disturbing. It's a mirror inverse image where the USDT is going up at the exact rate that USDC is going down. And what's happening there? Well, it's my theory and many others' theory that USDT is not actually backed by dollars, and that it's a quasi foreign hedge fund that kind of manages these redemptions, but doesn't necessarily back everything in dollars. And we know that to be the case because they say that they have, Bitcoin and gold and other things. But the issue here is that I don't think that they have all the money. So they're basically in a scenario where what appears to be happening. It would be a shock if this wasn't happening, because if you look at the charts, you can just, the numbers don't lie, right? Like, Tether mints $1 billion, Circle loses $1 billion, right? What's going on here? Well, unbacked dollars are being minted, which is like an IOU, but the problem is that the IOU never could really be repaid. It's just that the peg hopefully wouldn't depeg, because no one's going to sell more than a few $1 billion, and that's the liquid cushion that's being played with in the market. So what's happening here is that USDC market cap is draining just as fast, maybe faster, than Tether is being minted, or approximately enough at the same speed that if you compare the charts, they're a mirror inverse image. Now there's 25 billion left in the Circle treasury. You can see it all on chain. It's what's outstanding and what's 24, because then more billions were printed, right? But at the rate that it's being printed, I think 2 billion was printed today. It's Tether's at 90 billion. The problem is that not all that cash is backed. So what's going to happen when all of the Tether, the other 24.13 billion, is exhausted and pulled out? So you have traders on the market getting Tether for 99 cents on the dollar, 95 cents on the dollar, thinking, oh my God, I just made 5%. And maybe they did because they got in and out, but that USDC market cap is dropping. So what's going to happen? It's going to hit zero, and then Tether, like the Pina guy meme, effing zero, it's going to hit zero, and then you're not going to be able to cash out USDC anymore. And that's going to be a really big problem for Coinbase. And it's going to be a really big problem for crypto. It could cause a little market collapse. But ultimately, what will happen here is I think the situation will correct itself, just like FTX. It might be a little painful, but there will be a Noah's Ark flooding moment where there's no redemption capability in USDC. It's very hard to get out into fiat. So, while the market is Green, I recommend you guys get some cash because maybe later next year it might be difficult for a moment, and it's going to be another knee-jerk reflexive reaction from regulators, but most of them already know about it. Senator Cynthia Lummis of Wyoming has basically called it out, said, exactly, this is what you got to do. You got to go after these things. So we know that that's probably going to happen, and it just keeps happening. So, if you have senators and congressmen and congresswomen saying we're going to go after this, we're going to make an example or whatever, you can bet your ass they will. Right? Like, it's going to happen. So what's going to happen after that? In my opinion, you have this flood moment. You have this, USDC market cap is drained out. How could Circle stop this right now? I don't think they want to, because it's a little bit of a pickle. Well, I mean, I think they want to, but I don't think it's that easy to do that. They could say to every exchange that has USDT pairs, delist USDT or we will block all of your funds. And that would solve the problem, because then you wouldn't be able to trade USDT for USDC anymore. But USDC would take a beating in the public opinion market, because so many people are blind to the facts of what I'm telling you guys right now. And they would go, oh, they're just so stupid, whatever. But Jeremy would be not wise to allow this to keep going, because it's going to drain down all the billions of Circle redemptions. And in the end, it's going to harm Coinbase, it's going to harm other entities. Now, XMD is just going to remove it from the basket. That's it. They're not part of our ecosystem anymore. Bye. And I've always felt nervous about Tether, to be honest, because when I was starting Metallicus in 2016, that was right the first big time that they got hacked. And Tether Bitfinex got hacked, and Tether and Bitfinex are connected, so everybody was nervous about the value of USDT if it would hold. It's slightly depegged, but Bitfinex actually, lost customer funds and then did this wonky thing where they did it twice, where they had this thing called Bitfinex token, which they claimed was equity, and that you would get a proportionate amount of BFX token to what you lost, and you could sell it on the market for pennies on the dollar, or you could wait until they had recovered all the funds. And of course, everybody sold it for pennies on the dollar, and then Bitfinex said, congratulations, we've repaid everyone because you sold these things for pennies on the dollar. And then they did it again when they lost $1 billion in Crypto Capital Corp. They created a token called Unis Said Leo, which is very strange. If you look on CoinMarketCap, it will show as a top coin, but then you see the volume is only like $1 million. And why is it number 30 or whatever, 25? How did it get so high? I think that it's probably manipulated in the market price. But these types of things, for someone like me who's been here for over a decade watching it, are like, oh, this is not going to last, right? So, for the metal ecosystem, you can imagine that it just is probably going to be removed from the basket shortly. And that's going to be that. And it's out of our ecosystem. For Circle, it's a much trickier problem, where they're going to have to be forced to tell all the exchanges to delist, or they'll block them. And that makes it really hard for DeFi protocols, which are permissionless, because that's like, what are you going to do? Block all these people's money that are sitting in lending pools? It's a very sticky legal mess. So they're in a very precocious position. And I think that that problem is going to probably wind down to the 1 billion or sub 1 billion market cap of USDC, and you're probably going to see a Binance explosion. You're probably going to see Tether and Binance DOJ. This is not news. It's all, you can Google all of this stuff. You can find it on Twitter. It's been every week something comes out about it. But you're going to see an explosion, and then you're going to see institutional adoption. You're going to see banks coming in. You're going to see all types of new stable coins. In fact, you probably are already seeing the early, all of a sudden these new stable coins are popping up. Why is that? Because, people that are watching, that are in the crypto industry, are thinking, now's the time to shoot my shot. I'm thinking the same thing. And so that's why I think that, this is going to happen. I know it's going to happen. It's not a question of if, but just when. But it's
already started, Marshall. It's already started. I saw a couple stable coins pop up the other day, and they had a lot of liquidity out of nowhere, just like that. But I just wanted, while we have a lot of people in here, we have about 133, or now it's going up, but you know how those threes follow me, Marshall. I just want to let everyone know that Marshall and I are going to be doing a weekly wrap-up spaces, quick spaces, once a week. We haven't figured out an exact date yet. It'll probably be Thursday, Friday-ish, depending on his schedule. And if we miss it, most likely the weekend. It's going to be short. It's just going to be me and him up there. He's going to be going over what happened for the week. We might take a couple questions at the end, but it's just quick touch base with the community, see what's happening, and that's it. And then there'll be another one next week. So I just want to let everyone know why we had a good amount of people in here.
Yeah, James, do you mind if I go with my question?
Oh yeah, please go ahead.
Yeah, so hi Marshall. I was just
Thanks,
wondering.
Bullish. Hey, James.
I was just wondering if, for like some of the new people listening in, you could touch on the importance of BSA compliance when it comes to Metal blockchain and
Yeah,
why this is important.
absolutely. Yeah. I saw this tweet today about, Metal blockchain. Somebody called it just a fork, and I had to laugh because all of crypto is just a fork. Every crypto is just a fork. It's all a fork of a fork of a fork. And so, what's unique? The question is, what's unique about Metal blockchain, which they didn't ask. So I went into the thread and said something what makes it unique. But aside from the tech upgrades of the subchain and the work that we're doing around web authentication and making that work for EVM, which of course we want to bring to Avalanche and bring to Ethereum. And some have already done it. I saw someone in the Avalanche community had started some work on bringing web authentication to C-chain. So I thought that was pretty cool. Yeah, in terms of the vision of what we're doing, Metallicus has always been focused around banking and payments and trying to bridge the DeFi world with the traditional world. And ultimately, when it comes to working together with banks and financial institutions and payment processors and card networks, you're going to have some sort of notion of compliance. This is one of the reasons why crypto has clashed so much with the traditional finance world, is that there's been this early crypto anarchist ethos, which is like, well, F the banks, F you guys. And the problem is, yeah, if you want to cash out over the Visa rails, if you want to partner with banks, if you want to use Fedwire, if you want to use these networks, you're going to have to comply because they are not decentralized agencies. They're very much centralized agencies, banks, companies. You're going to have to comply with the laws of the land. And so, the U.S. tends to set the standard for a lot of Western countries. But then it's not too different, if you're going from US to Singapore, for example, in terms of the types of things that you have to have set in stone for compliance. In the US, just taking what we call the Bank Secrecy Act, right? This was built for banks when it comes to transmitting money between each other, a model for how you would analyze transactions and customers. And they call it, you can look it up, it's the BSA manual, Bank Secrecy Act manual, released by the Treasury. And it's an outline of what you need to do to comply with the anti-money laundering laws. And it's very serious because if you violate these laws, at least in the US, you're looking at real serious problems. It's not just like you can just pay a fine and make it go away. And there's exchanges out there going in the news saying like, oh, we're pondering paying a fine to make it go away. It's like, no, that's not an option. Once you violate it, it's like I murdered a guy, but I was wondering what the fine is to make that go away. Well, maybe for the right person it could go away, but for most people, it's not going to go away. And so you have to comply. And the blockchain world typically has not done that. But recently, and I've been singing this tune since we started Metallicus in 2016, compliance is part of our vision. It's part of what makes it work, what makes this bridge between crypto and banks work. And if you do it right, the person on the other side is not going to notice. One of the problems with compliance is that typically on many companies, the compliance department may not treat the customer very well, or might come at the customer with an accusatory kind of, it's all about how you treat your customers and the culture that you create at your company. And of course, you want to catch crime, and you want to, if you're doing it right, you don't notice it for the consumer and for the businesses that are connecting into it, but then you're also stopping crime. And it's very rewarding when you catch somebody with some stolen funds and return it to the person who it was stolen from. Well, let me tell you, it feels great. And so when people say like, oh, we want to have a platform, we want to have this, anarchist utopia, that's not something I want my friends and family involved in, where they could lose their life savings. And you're like, no, don't call the police. Police can't help you here. This is the land, land of the lawless. That's fucking crazy, right? So on one hand, you have people say like, well, crypto shouldn't have these things, but I guarantee you, every single person out there, if they had their money stolen, would want to do something about it, right? And so that's, just for starters, right? We're not even getting into the issues of terrorism or other things, but just on the topic of losing your money. Some asshole figures out how to steal the money out of your wallet. We're going to do something about it. So to be able to have the tools to do something about it, and to be able to have a blockchain that is built with this model of BSA compliance from the beginning, it all comes down to, can we have a chain that's resource efficient enough to handle hashing the attestation of identity credentials without costing a fortune, and also certain tooling that we're, going to build into the core of the chain. This is very hard stuff to kind of go to Ethereum Foundation or Able Labs and say, hey, I got a proposal, put this into your chain, right? Because maybe that's not the vision of that chain, but it is for Metal blockchain. And that's what makes us different. And so one of the reasons we found so much success in working with banks and financial partners and institutions is because we understand that, and we're building the technology around it. So when we come in and we're looking to partner and to work together and to integrate and connect to different vendors and partners, we show them what we've built, and they say, oh, wow, that addresses a lot of our questions and concerns. It's still not exactly there yet, because when I say exactly there yet, I mean, that every bank and every financial institution is ready to adopt blockchain and crypto, because Metal blockchain, for one, needs to grow more. But also, we need to see this stuff in production. We need to get things like Metal blockchain further along into production and working with our partners. And then also, we have to kind of get over the shell shock of the SBFs and the Tether explosions. And so, when that stuff comes to an end, and I think it's going to be coming to an end very soon, it's going to be a really incredible time coming up for crypto. But first, there has to be a purge. First, there has to be a flood, and there has to be an arc. And the arc is the place where you don't lose all of your crypto. It's a metaphor for that. And that's, what we're building at Metallicus.
Thank you, Marshall. Thank you.
And then one question on like the consumer side of things, because I love using MetalPay. The MetalPay XPRNetwork credit and debit cards, I know, is something a lot of people are very, very excited for, including myself, obviously. I got a little sneak peek in a Telegram chat of like what they look like. They look sick. Like, I can't wait to use it. Do you have like an exact time frame on like when those could possibly be available?
I've been saying it since 2017, but it will be available soon on the 17th of September at soon o'clock. I can't
It's a
say dates
riddle.
because it's a riddle. I can't say dates because every time I've always found, like, when I say dates, it will never be correct. It'll either be way under or way over. So I don't want to ever say like dates, but this is something that we started and we actually had to shelf at one point because of the FTX debacle. We're in the middle of like getting ready to launch our card, and now we're connecting with new partners, and we're looking to launch it hopefully next year. But it definitely put a damper in our sales. One of the things that I would like to see for MetalPay for next year is to bring back EU and to launch new countries like Australia, New Zealand, and also, it'd be great to get into LATAM and Mexico, Asia, and other places. But we've got our eyes set on bringing back Europe and getting Australia, New Zealand as fast as we can. And one of the things that we want to have is we want to be able to issue debit and credit cards for the end users. So you could get paid in crypto, or you could get paid in cash. You could have an entire crypto portfolio using something like using something like Loan Protocol, and you could essentially, have all types of options at your disposal in terms of how you could generate yield, make payments, things like that. If you think about it from like a business perspective, some of the newer digital banks are very cool, but still, the ability to transact globally and also to be able to cash out, to like swipe your MetalPay card at a store or tap to pay, is going to be huge. And I think that You know, there were companies that were trying to do this, but these companies had a very short-term vision, like BlockFi and other companies. They're gone now. They're gone, right? They're in bankruptcy. They got bought by FTX. They're, you know, people promise these things. Our vision is to leverage crypto where it is valuable and where it makes sense. And that's, for example, in like DeFi lending, DeFi trading, everything we've built with MetalX. And then to use the traditional networks where it makes sense, you know, card-based payments, wires, all these things that don't interact with crypto, and then slowly using Metal blockchain to start to bridge them together, where they're basically the blockchain and the payment networks are talking to each other. And that's the vision ultimately. But yeah, hopefully next year we'll have cards finally. And the goal too is also to get to, you know, eventually to get to digital rewards. We released a press release recently about some stuff we're kind of experimenting with early on, but hopefully that can mature and can do a lot of really cool stuff. Also with Metal blockchain, we're if you read about it, the same announcement, but we're working on tokenization of transactions onto the blockchain to also do fraud proofs and digital loyalty. We also made another announcement as well.
So would you be able to issue like,
Oh.
would you be able to issue like Iraqi dinar on the chain if you wanted to? People are asking me in the chat, and I told him, like, what would be the reason why you would want to do this if there's no DEX to put it on? You know what I mean?
Yeah, and theoretically, anybody could issue anything on the chain, right? So anybody could come and issue a currency or a token of any sort. For us, like in the ecosystem, the goal with Metal in the ecosystem that we're building with XPR, anybody could do it, right? So if somebody wanted to issue a dinar or issue a euro or a USD or some Canadian dollar, you could do that. You could use the network. You don't need anyone's permission to do that. But my vision is that ultimately we can start to kind of build an open network like what we built with XPR and Metal and XMD. That XMD could ultimately have the ability to move between other foreign currencies. So right now it's just USD. And I don't think it makes a ton of sense yet to have like other foreign currency pairs trading against crypto because most exchanges are focused on USD, right? But if Metal Dollar had the ability to mint out euros or New Zealand dollar or what have you, that would be pretty great because I think for a lot of people, you know, if you're in Australia, in New Zealand, you get paid in US dollars. Ultimately, you have some foreign exchange kind of cashing out, right? And if you wanted to, for your business or for your own personal savings, you know, switch from USD to AUD because it's what makes sense for you because that's how all your bills are paid, then you should be able to do that with Metal Dollar, and Metal Pay would be able to you'd be able to swipe your card and pay your bills and do all that stuff, and it would be in your native currency. So what I want to do with Metal Dollar is, you know, focus on the liquidity for the crypto pairs, but ultimately the Metal Dollar DApp can hopefully would be able to do that that arbitrage and would be able to give you a Metal Euro or a Metal New Zealand dollar, and you'd be able to deposit into Metal Pay and basically swipe or cash out, or vice versa. Deposit New Zealand in and get XMD.
Wow, that's incredible. And Marshall, I know this next question is going to hit a soft spot for a lot of people. But like, there's that saying that's out there, like, data is the new oil, right? Like, you've probably heard that before multiple times. And the way I see that is like the data is on the blockchain. Everything is going to be on the blockchain. And do you want to like talk about a little like how potentially in the future, like when banks and financial institutions are like more and more are starting to integrate and utilize the Metal blockchain and connect into the Metal Pay API, how potentially something like a credit score could be kept on like Metal blockchain or like XPRNetwork in the future? Like, is that a potential possibility? Because I'm sure like governments, especially like the United States, they would love to have something like that implemented for people in the future. And I'm not saying it's like a super evil thing. I personally don't think it is. But is that a possibility with like Metal blockchain XPR?
Yeah, absolutely. And the way for us in the U.S., the credit scoring system right now has there are three agencies that are like quasi government private agencies. They're kind of like hybrid, right? So you've got Experian, TransUnion, and Equifax, and these three credit bureaus monitor everyone's credit, and they have different ways for determining what gives somebody good credit, what gives somebody bad credit. They're generally similar. So if you look at all three credit scores you have compared, they'll generally be in the ballpark, but one will always be higher and one will always be lower than the other because they have different ways to kind of create that data. So it's interesting because I spoke with Experian, I spoke with some of the credit bureaus early on. We were building the MetalPay app. This is and some people in the room know this because I've told them this. This is something we want to do. We ultimately want to have capability in MetalPay on the MetalPay consumer app, to be able to see your credit score, and to be able to build that, and through like a partnership with the credit bureau. But then there's other data that can be collected, right? Like we're talking about like the loyalty. For example, right now you're rewarded if you have no loans and you paid off all your debts. It actually can be bad. If you don't have a lot of history, it actually will make your credit score go down. So having activity is one of the things that makes your credit score go up, and having healthy activity, like you have like a loan, for example, but you pay it on time, you pay it ahead of time, and then you pay it off, and the credit bureau sees that and goes, oh, okay. Because no loans, for example, or no activity is very bad, because to the bureau, it's like this guy's dead or whatever. It's not alive. But when it comes to blockchain, the value of that is that now you can have this attestable data that can move between any of the three credit bureaus, could go between Experian, TransUnion, Equifax, where they don't traditionally store data. And you could be rewarded even for increasing your credit score through things that were more meaningful, because sometimes the interactions are not that meaningful. So I think through the power of, for example, XPR, and you mentioned the oil analogy, people have also heard me say this years prior to before XPR even launched, when we actually called it XID in the very beginning, that XID would be the oil, or XPR would be the oil. And the way that XPR is built is kind of that
The
way.
Simpsons.
If you go to protonresources.com or resources.xprnetwork.com, sorry, it's a mouthful. If you go there, or .org, sorry, if you go there, you can buy resources. Just yesterday, I made like 5 Ethereum transactions. You know how much I paid? I paid like $70 in gas fees for 5 transactions. You know how many transactions I make a day on XPR? I couldn't afford it. Right? Like, it would be like thousands of dollars every day if I was using Ethereum, right? So we've got layer 2s, which show a lot of promise, and there's a lot of exciting stuff, and we're looking at that as well, and we think that that's really exciting. I have a prediction around that as well, that I believe that layer 2s. I think that after all of these years, we've started to find some really big trends. What are the really big trends? Well, proof of stake's not going away. Bitcoin is the king. Stable coins are going to be reset. We just discussed that. What are the other trends? EVM. EVM's the king. If your blockchain doesn't have EVM, or you're not interacting with EVM in some way, you're getting left behind, right? When you go to DeFi Llama and you look at Ethereum, it makes up, like, if you cut out Tron, it makes up 95% of all the DeFi activity. You take the other layer 2s, they make up the rest of the Ethereum activity. So the thesis that there's most of the hard, like, stablecoin assets and other things are on Ethereum, that's correct. And so I think into the future, and I've said this for many years, it's a multi-chain world. My thesis is, I believe bank chains like Avalanche and Metal are going to explode, and they already are. You see both of us in the news, making headway, and I think that maybe Metallicus started it, and then Ava Labs is like, yo, let's take a look at this. But our focus has always been banking. When you look at the direction that everything's kind of going with what we're building, it's a network that will allow that interaction, and A-Chain will be able to really scale this capability. So like credit scoring and digital loyalty and rewards. In the past, you're maybe rewarded for paying off a loan, but what about like What about all the local businesses that you shop at liking you and wanting to give you rewards, right? Does that count for anything? Because I think that, shopping within your community should have some value too, right? And there are all types of triggers that could incentivize small business and the consumer to build their credit in a way that didn't feel weird and strange. Because right now, like most of the credit score interactions, it just feels weird. Like we know that paying off your loan makes it go up. We know that paying your bills on time makes it go down, but sometimes it just goes down for no reason. We don't really know. And so I think, using something like blockchain can influence the credit bureaus, and not just in the US, but globally in other countries. This technology can kind of span out. And I think that it starts with creating those partnerships. And that's something that we want to do eventually in MetalPay, to have that kind of full financial view, because it's not just the ability to spend, but we want to give you the ability to improve your credit and to have a MetalPay credit card and have bigger limits and so forth and get more rewards.
Back on the EVM thing, Marshall, I believe that, yes, everything you said about EVM is correct. And James and I speak about this a lot too, that obviously we're in an unregulated market, and the big boys, the banks and the institutions, they're not going to play in it until there's proper regulations. We all know that. But that doesn't mean they have not been monitoring, testing, and watching this space the last 13, 14 years, whatever it's been. EVM, yes, is the standard now. And what James and I were talking about, what we believe with the EVM is, that's the funneling mechanism. All the big banks will start off with EVM, 100%, 95% of them. And you might even be building custom EVM, modified EVM versions, virtualized on subnets, subchains for banks on Metal. However, I believe once they start playing with the EVM, and as time goes on, they're going to need more options, and soon we'll start upgrading to like an AVM or a PVM or any of these other virtual machines that are in fact much better than the EVM. Yes, they started off with the same technology, but technology never stops. It's getting better and better. We just believe that EVM is that funneling mechanism, and once they finally play with it, they're going to want more options as time goes on. And one of the things I love about the ecosystem is you have every option, and more options are being added as time goes on. You don't want EVM? That's fine. We have the PVM, we have the AVM, and more to come. EOS.IO, which is one of the most scalable smart contracts horizontally. So everything is there in the ecosystem. We just got to funnel them in through the EVM.
Exactly. I think that EVM has that popularity, and I don't discount the layer two. I have another prediction that I believe that I've told some people this, and I probably should have said something about it earlier, but I'm working on something around it that I don't want to say yet. So I just kept my mouth shut. But um, you may have noticed Coinbase, Base, Layer 2. Kraken announces their intentions. OKX announces their intentions to become a Layer 2. What's going on here? The Layer 2 phenomenon is kind of, the first kind of connections or bridge between traditional finance and decentralized finance in the Ethereum world. And so you're going to see more and more L2s popping up that are going to connect with the shared security of the Ethereum base chain. And it's going to start to bridge over to things like Avalanche and Metal. And at the end of the day, to your point, when it comes to the banks, yes, they're going to experiment with the most popular stuff as they do their research. But at the very end, as long as it all securely connects to each other, it doesn't matter. It's going to be about what's the most effective and the cheapest, easiest thing to use, because the front end is going to be labeled with that bank and that financial service provider, and it's going to be about user experience. In the beginning, it's kind of about connecting around crypto and trying to find a pathway. So this is why you see Visa and other companies talking about the research of the EVM. Onyx is an EVM, by the way. I spoke to the one of the early guys at Onyx when they were called Quorum, And it was funny because I was laughing with the head at that time, and he was saying, "Oh, it's just a pure Ethereum proof of work fork." But it's evolved a lot, and now you have like the news today that came out today with the Project Guardian. But there's a lot of this stuff going on. It's not just JPM, but it's all the banks. And yes, you're seeing some of the stuff, the top four. But I've got news. There's 4,500 banks in the United States, right? And then you got your top four. Of course, your top four are going to have their proprietary networks like Onyx, and I'm sure you're going to hear Bank of America announce theirs probably after the Tether collapse or whatever. Guess what? They're probably going to have their own stable coins. And so, we hope to be a part of that with the top fours, but also with the other, 4,496 banks. We want to be in with those guys as well. And we want to have technology to connect. So I look at it holistically as it's not a winner take all, and there's only one player. I think there's going to be multiple players. You may have read when the FedNow news came out, there was another enterprise service called Tassat, which was one of the other approved ones. Yeah, there's a couple players out there. But if you use the Metallicus software from front end perspective, from a consumer perspective, everyone that's here on the spaces, you guys know it's very clean. It's a very good experience. There's enterprise software that, they get out there and it's all kind of experimental. And then there are companies like Metallicus that, build open networks and cut our teeth on the front lines and make sure people can really use it. So I'm very confident in, what we've built and the ability for it to connect to banks and to financial institutions. And I think it's going to get better and better. The next couple of years are going to be amazing, but we are going to go through a little bit of a hurdle, and we are going to see a stablecoin reset for sure. And we're going to see regulations start to really heat up. But as that's happening, the news that you saw today, like with Project Guardian, that's just the appetizer, right? And Metallicus is one of the actors in the play, right? We'll make our entrance on stage soon enough. You've already seen us, but we're going to be one of those key players in the financial services space around blockchain.
I just wanted to ask, will WebAuth connect with Cosmos IBC technology? Because it's labeled the Internet of Blockchains, so it's kind of doing its own thing. But do you see a future where XPRNetwork or WebAuth connects with Cosmos IBC tech?
Yeah, absolutely. The WebAuth wallet, we started with XPR, and then we added Metal Blockchain. So we added our second chain, and then we plan to add more chains. So we're going to add Ethereum, and we're going to start to add other chains. And the IBC network encompasses multiple blockchains such as Osmosis and other chains that are in the Cosmos ecosystem, and they can bridge and talk to each other through IBC and Axelar, for example. So we do look to support that, but it's just kind of like baby steps, right? I think the first most important thing is to add, the big boys, get Bitcoin supported, get Ethereum supported, get Dogecoin supported, gets the layer 2 supported, start to build out the wallet to have this capability. Because I personally, I was telling my team, we were kind of debating, when you're building something like this, you don't want to boil the ocean. And Metallicus is doing a lot for a really small team. We want to make sure that we have the resources to do this, but the goal ultimately is to build a better banking platform and a better wallet and have them all connect, right? And that's MetalPay and WebAuth. So in the future, to be able to not only have the wrapped assets, which are interacting in the MetalX and Metal ecosystem, like for example on Loan and MetalX, that you could unwrap those in the same wallet. So you could unwrap, for example, XRP or XLM or Ethereum, and it would just, boom, you'd be in the wallet. So you have one you have one ecosystem. You don't have to have, all these different companies' apps that don't necessarily talk to each other and work together. The goal is kind of like when you look at like Google or Facebook. Facebook's kind of an antiquated thing now these days, but like a platform, right, where WebAuth talks to MetalPay, and you don't have to get any other third-party wallets. And ultimately, we want to support all the best network. So roundabout way of saying yes to IBC, but we are planning to expand WebAuth for multi-chain support, and hopefully ultimately bring WebAuth to the other chains that we do support, like Ethereum.
Hey guys, just listen. I love this saying because it's true. The GitHub never lies. And if you head over to their GitHub, they have the most commits. They're building the most. Bear markets are for building. You build that entire time during the bear market. Once we have the BTC halving, a couple months after that, the fruits of all their labor, and I'll post it at the top if you want, their GitHub is gonna come full circle. It's a lot of building. There's a lot going on in this ecosystem, and there's a saying, Marshall. This is your saying, and if you can elaborate for everyone, that'd be great. Layer 3 optimizing the first layer with a second while utilizing a different chain's consensus.
What the?
Yeah, so it's funny because, you know, in crypto, the buzzwords are very popular. So something will come out, you know, ISO 222, quantum resistant, right, or something, right, and everybody is, you know, jumps on it. Like, is this blockchain EVM compatible? Is it a layer one? And one of the things that that I think is a funny buzzword, but is very true, is the, you know, the L1 movement. You know, every blockchain is essentially a layer one, right? Bitcoin is a layer one. It may not have, you know, deep smart contracting capability, but it has basic contracting capability like multi-sig and things like that, and time lock. And so when it comes to scaling, right? If I said, you know, tomorrow, hey, listen up, everybody in Bitcoin, I've made a better Bitcoin, and and we're going to just switch to this. Well, we see that, you know, there's BSV out there that's trying to do it, really struggling. You know, there's BCH, Bitcoin Cash, but there probably won't ever be Bitcoin, right? Now, some people will debate that, right? But the thing is that if you wanted to scale Bitcoin, if you wanted to scale Dogecoin, it may be very difficult to do that with the entrenched nature of proof of work, right? You say like, oh, we're going to switch it to proof of stake, and every proof of work person is like, no, I don't believe in proof of stake, or there's technical security issues, or I just don't want to do it, and that's not what the original vision of Satoshi was, or this or that, right? People will fight over these types of things. In my opinion, so you have layer one, everything is a layer one essentially, right? Layer two was kind of the next kind of buzzword to kind of come out, which was scaling a blockchain with like a centralized sequencer, like Optimism or Arbitrum, right? So Ethereum doesn't go fast enough, we're going to use the security of the network to allow it to go faster, but it's going to use these cryptographic proofs and that rely on some form of kind of centralized sequencer. And that makes sense for a payment processor, a Coinbase, a Kraken, a Metallicus. That makes sense, right? So all the fiat payment processors are going to be doing L2s eventually because it's natural that they would. But layer zero was something that I noticed. I'm friends with the Cosmos founders, and I was an early participant in the Cosmos token generation events. And you know, so I'm a believer from the very beginning. I helped when Cosmos was just starting. I helped them secure one of their first investments. It was, you know, it was tiny compared to how big things got. But so I'm a believer, right? Cosmos ultimately
Wah, wah, wah.
the technology is very good, and I think that ultimately it is going to go in that direction. We're going to have essentially a multi-chain world that connects through all these different blockchains. Sorry, I kind of lost my track of thought. I forgot what the question was, but I don't know if
It's
I
all
answered
good.
it or
It's
not.
all good. Rein it in a little bit, right?
I have a good question. A marketplace for tradable names.
Oh yeah, somebody was asking about this. So EOS has it, and we could enable it. This is a great governance proposal thing, right? That we would, you know, should we build a marketplace for names? People have been asking about it. One of the reasons we didn't do it early on was because in the very beginning we want to make sure people were able to get like early handles and things, and they weren't all like sniped out from the day XPR launched, right? But now it's been, it's going on 4 years since XPR was launched in 2020. I think it could be a great governance proposal, or something for Metallicus or for someone else to build, to get a grant to build, because I do see a lot of potential with like what Albosec is doing, for example, with building his Proton DNS, or sorry, XProtect is rebranded, the XProtect network. He's got a service that you can connect to your computer or your mobile phone, and when you surf the web, if you hit like a phishing link, XProtect, Albosec, one of the XPRNetwork consortium members, his software will filter it out for you, so you won't even hit like the phishing site. But the other cool thing that he's doing is Albosec has created the ability that now you can register, for example, XPR names. Like you could have, at marshall.com or something like that. And if you're connected to the XProtect network or other future similar type platforms like that, you'd be able to basically just type that into your Safari or Chrome, and you can visit that site. And it's even more secure because you can now have encrypted communication between XPR keys, right? Of course, you can do that with SSL, and the web is built for that. But it's just interesting, right? Could open up different types of payment capability. But yeah, I do think we should have that, and Metallicus or someone should build it.
There's a lot going on right now. 1 second, Rick. I just want to piggyback off this. For newcomers, there really is a lot going on. The full ecosystem. So I was talking to Marshall the other day, and for the last, I think, like 4 or 5 days now, I've been building for the community a custom GPT. So I've been training it on all of Metallicus's data, Metal blockchain, XPRNetwork, MetalX DEX, and I see Paul down there. I'm also training it on all the coding data, the smart contracts, subchains, subnets. So it'll help if you want to code on chain, if you want to build your own subnet, if you want to play around with smart contracts, or if you just want information about Metallicus, the company itself, Marshall's journey. I've been training it for like I said, the last 4 or 5 days. So for the newcomers or the techie guys that want to build on chain, I mean, I put all of Paul's coding bots into the thing. I'm almost done, but what else is in there? XMD. I mean, literally the entire ecosystem, the advisory board, everything is going to be in this custom GPT, and it's going to help the newcomers a lot because there really is a lot going on in this ecosystem, and it's also going to help the devs. Even Marshall's devs can use it, help them speed things along a little bit, because I am literally throwing every piece of data I can find into this thing, and I've been training it for a couple days. So besides the weekly wrap-ups with Marshall, I'm also going to be releasing this custom GPT. It'll be in a beta mode. Got to get a lot of feedback from you guys. Let me know what's not working, what is working, and we'll continue to bring it up to speed. Go ahead, Ricky.
That was me, and very, very beautiful momentum. That's amazing. And for all the XRP community members who are in here or who are going to listen to the recording of this spaces later on their drive into work tomorrow or as they're winding down their evening, they say, well, what's the difference between XPR and XRP? And well, it's very, very clear because, for example, if you're an XRP holder, you can't vote or participate really in what happens in terms of like the decision making in the ecosystem on the XRP ledger. But when you hold XPR or you hold loan or you hold MetalDAO XMT, you're a governor at that point. And that's the big difference, is that when you're involved in this ecosystem, just with a single coin, not that that's that much to hold, but like you can literally participate in like the yes or no on what gets added to loan or what gets approved on the XPR network. And like when you look at like a lot of the big financial institutions in the World Economic Forum, they're talking about a level playing field. Well, what provides a level playing field, guys? It's this type of technology that provides a level playing field. And I'm just trying to make people open up their eyes. This is the technology, in my opinion, that enables a level playing field, because you as a community member, as a retail person, can vote on proposals. You can be in charge of, not all of it, but you can have a say. When in the past, in the last 100 years, last 1,000 years, have you ever been able to have a say in what happens in terms of like an ecosystem? This is a level playing field. This is decentralized technology that enables you, a regular everyday person, to participate in what happens in a financial ecosystem. This is going over a lot of people's heads. So when you say, oh, what's the difference between XRP and XPR? This is it. You get to vote on things in terms of like what actually happens in the ecosystem. That's a really big deal that a lot of people are missing. And we need also a lot of people to go ahead and roll over to the amazing governance dashboard that Marshall's team has built, because it's very simple to use. All you have to do is basically connect your, well, somebody else could probably explain that better than me. I'm not too much of like a tech person, but
Well, James, with the level playing field you're talking about, I believe you're referring to the stablecoin XMD. And for the newcomers, or anyone that doesn't understand XMD, it's a stablecoin basket, meaning you have USDC, you have 4 different stable coins in the basket. And if one of those stable coins loses its peg, you have the other ones to fall back on, which is why XMD is almost never going to lose its peg. And eventually, as we become a more mature market, instead of USDC and this and that, you'll see things like JP Morgan stablecoin, Bank of America stablecoin in there. And the reason why James was saying it's a level playing field when it comes to the stablecoin is the voting and the shares of that basket will be with XMT. Well, it used to be MTL, but anyways, that the amount that you buy of that. So banks are going to be competing with a level playing field by buying shares of that for their share in the basket. And that's your true level playing field when it comes to the stable coins.
well, I'm also talking about how, like, even for example, something like loan, when we as a community were like, hey, let's get XRP in the loan protocol, because a lot of us originally come from the XRP community. We as a community voted XRP into the loan protocol, which is a fully compliant protocol. And now all of us can literally lend our XRP and make passive income in a completely safe and compliant ecosystem. So it's XMT, but it's also XPR, loan, and who knows what else is to come.
Metal too. Metal is going to have one too as well.
What? I didn't
Already
know that,
does.
really.
Yep.
This is what I'm saying. There's a lot of things that even I don't understand. I don't know. I'm not a technical person,
This
but
is why
only
I
when
built
you
the
guys are into stuff.
GPT, James. You can play around with it when it's done, man. There's so much data in this thing.
Holy cow, this is incredible. I'm freaking out, guys.
James,
Hey,
James.
hey guys, I got a jet, but I just wanted to leave you guys with a thought. One thing I want to say before I go is exactly, what James is saying is very correct. Like, traditionally in crypto, and I was reading in a newsletter today in my email about this, about DYDX, which is a DEX that's built, has become the top DEX, highest volume DEX, that, they're going to allow people to earn some of the revenue of the exchange through staking the tokens. But a big controversy arose because people realized, wait, they own all the tokens. So it's not a level playing field, right? If they get hey, we're going to give you all the token holders a profit, and we hold 89% of all the tokens or whatever, right? So it's not really a level playing field. But in the case of XPR, it is. You know exactly how much the core dev Metallicus has, approximately 1 billion out of 28 billion. People say, oh, you could just go mint some more. No, we can't. We would have to make a proposal and get that approved. And we don't really have the desire to go beyond that unless the community wants for what we've built with the Phoenix. We think that we've done a really great job, and we're pretty much almost complete on that. But what I wanted to say was that the dashboard is not just for the devs; it's for everyone. Whether you're building an application you want a grant to build a tool or something like that, or if you're not technical, let's say you owned a small business and you wanted to integrate and accept XMD and XPR and Metal and BTC and other cryptos for your business, I'm pretty sure you could probably go make a proposal right now. Hey, I want, you know, $500 for my small business, my brick and mortar. Here's where it's located: 123 Main Street, Illinois. And yeah, I'm gonna take some photos, put it on Twitter, and give my customers some XPR that I got through a grant, and put a sign up in the window. You could do that. You could make a proposal. What other blockchain could you do? Nothing, right? There's no community and crypto like that. And also something that would make sense, right? If you told your customers, hey, you know, what's another fast top blockchain that's out there? Solana. Are your customers all going to get some Sol coins and use the wallet, or are you going to use something that's totally free, easy to download, has the fiat ramps? You know, so I just wanted to put that out there. The governance dashboard isn't only for the devs, it's for everyone. And I saw that there were only 2 proposals in there. One of the things I'm going to ask for the consortium to do is hopefully, you know, lower the proposal amount from $100. We put that proposal amount in the beginning just because we didn't want to get a ton of spam, but I really do want to see more activity. And, you know, whether you're a small business owner or a developer or, you know, a streamer with a YouTube channel, make a proposal, right? Because this technology, this whole platforms here is built for us to run our businesses, to transact with and to use. And it's not just for the devs. So that was the message that I wanted to give. And the other thing I wanted to say too, last thing is, and James brought this up, like XRP or like my DYDX example. Unfortunately, there's a huge disproportionate amount of, you know, what the community has versus what the foundation or core devs have. In the case of XPR, it's just not the case, right? You know, Metallicus as the core dev has 1 out of 28 of the billion total amount of coins, and the XPR, the consortium, has about 4 billion, but it's only doled out based upon the governance grants. So, you know, go for it and check it out. And I think, you know, when you look at these other cryptos, there's nothing that's so distributed as XPR with a community that wants to do these things. I think we just need to kind of rally people and inspire people in this next market cycle that there is this platform that has no gas fees, that's compliant, that works with the banking system, that you could integrate in your small business, brick and mortar, online. If you have it online, you can integrate it into your WordPress website, and we're working on a POC with Clover and Fiserv, and hopefully you'll be able soon to process cards in connection with Metal blockchain. A lot of really cool stuff coming, and it's going to be mind-blowing. And so, you know, just participate. You don't have to be a dev to make a proposal, and I'd like to hopefully soon lower that from like $100 down to 10, so everybody can easily do it and it's not too expensive. So thanks again, James. Thanks, everyone. Thanks for coming out tonight. And I will see you guys all online. Cheers.
Wow. Thanks so much, Marshall. That was awesome. And